Good morning, everyone. Let's begin revising the entire accounting standard AS-20 again. And once we are done with that, there are 3 questions which are left. And they are 7, 18, and 20. So what we will do today is we will revise the entire accounting standard 20 from the first sentence. I will explain everything to you again. We'll have a quick revision. Then we finish off the pending questions, and then we focus on your doubts. So if you have any doubts after that, let's solve them. Right? So I'm not asking you for the doubts right now. Let me just revise the entire standard, finish off 3 questions, and then we will go to all your doubts. And today we should be in a position to finish off the entire accounting standard 20. So please sit back and pay attention and understand each and every concept that I'm revising. I will try and revise in as much detail as possible so that the entire standard is revised for you thoroughly. Right, so we are doing AS-20. The heading for the same is earnings per share. And before I go to that, just quickly let me know on the chat box, am I clearly audible to you? Are you clearly able to hear me and understand whatever I am speaking? If you could just confirm that on the chat box. Okay, thank you so much. Perfect. Let's begin with AS-20. One of the most important accounting standards that you have, accounting standard 20, earnings per share. It says that an enterprise is required to report earnings per share. There are 2 types of earnings per share, basic EPS and diluted EPS. Both have to be disclosed where on the face of the profit and loss account. Whenever you have profit, you will have positive earnings per share. However, in case you have a loss, then you will have negative EPS. Both positive or negative EPS needs to be reported in the financial statements. You also have to report the previous year EPS so that you can have proper comparison as to whether your EPS is increasing or reducing every time. So EPS needs to be reported even if it is positive or negative, and previous year EPS also needs to be reported for comparison. Basic EPS, the formula says profit to equity shareholders divided by weighted average number of equity shares, that is VANES. So the formula for basic EPS is profit to equity shareholders divided by VANES. Then we did key points as to how will we calculate the profit to equity shareholders. So we will always take preference dividend. If non-cumulative, we will look at the question. If they have mentioned in the question that you need to deduct this, only then it will be deducted. Preference dividend if cumulative means in any case you have to pay for the years when you could not pay dividend. That will be deducted from the profit and loss account whether mentioned or not. And dividend distribution tax, which is associated with this with distribution of dividend, also needs to be deducted. Your extraordinary items must be adjusted when you calculate EPS. However, if the enterprise feels that we want the EPS without the extraordinary items, they can do that voluntarily, which means in that case you will have two disclosures, one after adjusting extraordinary items and one without adjusting extraordinary items. Equity dividend, transfer to reserves, etc. These are all appropriations of profit, and hence they will never be deducted from the profit. Right? This is the first part of the accounting standard and first part of the formula as well. We just understood how to calculate profit to equity shareholders. Now we will understand the calculation of Vains. So for Vains, you will think in this way, that when you had opening balance of shares, these shares remained for the entire 12 months. So the time weight will be 12 by 12 and you will get your weighted product. When you issue shares, which this means that the number of equity share capital is going to increase. So that increase in the month of May, so June, July, August, September, October, November and December, this growth in the number of shares remained for 7 months. So that you will add. And finally, you have buyback of shares which took place on 1st November. Buyback will reduce the number of shares, so you will deduct for 2 months, and that will give you the weighted average number of equity shares that you have. After that, we went to the next concept, that is treatment of bonus issue, stock split and reverse stock split. We have already understood that these three are corporate actions. They will simply change the number of shares, but they are always issued without consideration. For example, bonus means you capitalize your reserves. What is the meaning of that? You give shares free of cost. Now, because you give shares free of cost, see, please understand the concept of Vains came because you feel that you have invested from day one. I invest after 6 months, which means आपने 12 महीने तक इन्वेस्ट किया है, मैंने 6 महीने ही पैसे इन्वेस्ट किए. अब आपको और मुझे सेम रिटर्न नहीं मिल सकता क्योंकि आपका इन्वेस्टमेंट का ड्यूरेशन मुझसे 6 महीने ज्यादा है. इसीलिए हम वेन्स ढूंढते हैं, क्योंकि आपने पे किया है, मैंने पे किया है, आपने 6 महीने ज्यादा इन्वेस्ट किया है, मैंने 6 महीने कम इन्वेस्ट किया है. तो टेक्निकली मुझे डिविडेंड कम मिलना चाहिए, आपको ज्यादा मिलना चाहिए. इस लॉजिक से हम लोग क्या करते हैं, वेन्स कैलकुलेट करते हैं. But please understand, bonus does not involve any payment of consideration, which means bonus issue is always free of cost. Because the bonus issue is free of cost, no consideration is involved, no question of who getting higher, who getting lower because of the time of investment comes into place. That is why for Vains, the actual date is to be ignored, and you will always take the earliest reporting period. So here it is, actual date of the above action needs to be ignored, and you will always take the earliest reporting period. What is the meaning of the earliest reporting period? Say for example, you gave a bonus issue on 1st December 2019. So the earliest reporting period is 1/4/2019, the first day of that financial year or calendar year as the case may be. So for bonus issue, stock split, reverse stock split, you will always take the earliest reporting period, and the actual date for their action needs to be ignored. What is the meaning of stock split? When you have one share of rupees 10, you split that stock into 10 shares of rupees 1 each. So if you imagine, the total capital remains the same. See, I'm writing over here 10 share. You have one share of rupees 10 each. Now what's your total capital? 10 rupees. 1 into 10. I make that 10 shares of rupee 1 each. Again, if you imagine, if you understand the implication, total amount, total investment remains the same. Only one share which was of 10, you split that into 10 shares. That is known as stock split. Right? Again, that's a corporate action. No consideration is involved, and you will always take the earliest reporting period. After that, say for example, you have this as your situation. 10 shares of rupees 1 each. Now you make it one share of rupees 10 each. Again, this does not involve any consideration. Nothing changes. The value remains the same. However, there was stock split already, and you did reverse stock split. So this is typically a case of reverse stock split. Again, all these three, bonus, stock split and reverse stock split, are corporate actions that do not involve any consideration. Therefore, actual date of these actions is to be ignored, and you will always take the earliest reporting period. And of course, all previous year EPS should be adjusted for comparison, which means if your current year is along with, if your current year is with bonus and your previous year is without bonus, then you cannot compare the two. For comparison, हम पिछला साल भी bonus वाला बना देंगे. And then if when both the years involve bonus, then you can easily compare the two. Right? This is treatment of bonus issue, stock split, and reverse stock split. That is something that we did over here. We made in this question, you have 2 years profit. 2012 is your current year. Since it is written year 2012, this is the calendar year. After that, you have number of equity shares outstanding was 20 lakhs. So we first understood the bonus issue. It was 2 equity shares for every 1 share that was held. So हर 2 शेयर के पीछे 1 शेयर, तो 2 equity shares for every 1 share. Sorry, 1 शेयर के पीछे 2 शेयर, तो 20 lakhs के पीछे कितना? 40 lakhs. So we added 20 lakhs existing plus 40 lakhs of bonus shares. Total came to 60 lakhs. So 60 lakhs divided by 60 lakhs came to 1. However, we cannot compare this and 0.30 because 0.30 is without bonus. 1 is with bonus. So we adjusted the EPS. I'm sorry, you cannot directly divide 18 lakhs by 20 lakhs and get your answer. What we did is 18 lakhs and we made this also as an element with bonus. So now you can easily compare 1 rupee and 0.30. Right? So this is how you will adjust the previous year for the bonus issue so that both the years have bonus and you can easily compare the two. Right? Are you getting it? This brings you to the end of the next concept. Now let's stop over here before I go to the rights issue. Let me take doubts if there are any. So if you have any doubts, please post it on the chat box. This is one part of the standard is over. Before I move to the next part, let me take your doubts. Okay, so I have one doubt which says if someone has odd number of shares, then generally refund is done. That is to be noted. Pushti, if you can explain this properly, how because of odd number of shares will you have a refund? Odd number of shares. So can I say someone has 133 shares? This is what you mean. Someone has 1/3. This is what you mean. Okay. So suppose if it says 1 share. So let's take the same example. 2 shares for every 1 share held. If the bonus element says 2 shares for every 1 share held, which means हर एक शेयर के पीछे 2 शेयर, तो 133 के पीछे कितने? So 133 into 2 will be 266 shares. So there is nothing to refund in this case. You have 266 shares that will be given to you as bonus shares. Right, I hope this is clear to you. Okay, perfect. Are you all clear with this? Quickly on the chat box. Are you all clear till here? Okay, I have one more doubt which says that in question number 3, they had taken time weight between the dates mentioned and same way it is calculated in some other question. But when do we calculate the time weight according? So, Shifa, there are 2 methods of doing it. The institute has allowed both the methods. I have taught you only one method in order to avoid confusion. So I would recommend that you can easily follow our method because that is where there are least chances that you will get into any kind of confusion or you will make a mistake in the exam. So Shifa, I would recommend just use our method, and that is how you can easily solve the question without any confusion and without any scope of making silly mistakes. Right? I hope Shifa that is now clear to you. Okay. Spruha, you have a doubt which says, do we take earliest reporting period only for recording these transactions? Of course, when it comes to stock split, reverse stock split, And when it comes to bonus issue, you will only in these cases take the earliest reporting period. Right, I hope Sprua that solves your doubt as well. So Akshay, you have a doubt that in given example, if the bonus is 2.5 per one share. So Akshay, first thing, that is not possible. How will someone give you half a share? So usually 2.5 share is not possible. So this is practically not possible to have half a share to be given to someone. Right, I hope that is clear. Everything is clear till here, and only then we can move to the next part. Okay, if say for example, if someone uh, has a lot of number of shares and is unable to maintain those number of shares, because as many number of shares that you have, as many number of shareholders that you have a lot of procedure to be done. So in order to ease down the procedure, you can always use a reverse stock split where you can reduce the number of shares so that you can easily manage that. On the other hand, suppose if you want to show a higher number of shares without actually having without actually issuing shares, then in that case you will have it in this case that you will do a stock split for that, so that you can have the number of shares without giving an issue. These are all corporate actions that companies may take to show a particular number of shares. Right, Spruha? That so basically that is why it is known as corporate actions. Right, Raj, you have a doubt which says, what if the bonus ratio is 1:2? So do you mean one share for every two shares held? Raj, do you mean that one share for every two shares held? Okay, let's understand that also. So one share for every two shares held. So what if it is 133? So you will have this, in this case, 133 divided by 2. So you have 66.5, which means when it comes to 66.5, we will this time go on the lower side and have only 66 shares. So you will have 66 plus existing number of shares 133, which will make it to 199. Are you getting it? This is how you will work it out. Right, I hope. Nothing, you round it off, you take 66. You may take 66. Okay. Right. Since all your doubts are now done, let's proceed to the second part. Again, we follow the same structure. We finish off the second part, we again take your doubts. Then we finish off the last part, and then we do the remaining questions, and again we take your doubts. Right, let's come to treatment of rights issue. Now, rights issue is a privilege that is given to the existing shareholders. Right, if you have to issue shares to someone, again it is a problem that when you issue shares to people outside, which means non-existing shareholders, then it becomes a question as to will they pay the entire amount on time, will there be a problem of forfeiture. You also have to go for underwriting, because then it's a completely new issue. So what a company feels is that what we should do is we should give this benefit to the existing shareholders. When you give this benefit to the existing shareholders, you're confident because they're already your shareholders. Plus, you keep your shareholders intact in the company. It is then easy to retain them because you are giving them an add-on benefit because they are existing shareholders. So this concept is known as right shares, where compared to the market price, you give the existing shareholders a benefit to buy at a lower price. Right? So there are three steps to calculate this. The first step is calculation of theoretical X rights value per share, which is Mn plus SR, N plus R, which means Mn means pre-rights value per share into number of shares. इससे पता चलेगा rights issue से पहले हमारा capital कितना था, value कितनी थी और number of shares कितने थे, plus rights subscribed and number of rights. So rights subscribed and number of rights means आपके rights का value कितना है. इन दोनों का total आपको बताएगा. Rights के बाद हमारा total value कितना होने वाला है, and you divide that by the total number of shares before rights and plus due to the rights. So at this way you will get the theoretical X rights value per share. Now your theoretical X rights value per share will always be less than your current value of the share, because your number of shares are increasing, the value remaining the same, which means your EPS, your value of the share, is going to fall down because number of shares are increasing. Using step 1 you will calculate the adjustment factor कि इस राइट शेयर्स की वजह से मेरे शेयर वैल्यू में कितने टाइम से इफेक्ट होगा. एडजस्टमेंट फैक्टर इज ऑलवेज कैलकुलेटेड विद बेस टू टाइम्स. सो द यूनिट ऑफ मेजरमेंट इज टाइम. सो कितने, बाय हाउ मेनी टाइम्स विल द वैल्यू बी चेंजिंग. So your adjustment factor is fair value of the shares before the rights issue divided by theoretical X rights value. Then in step 3 you will calculate EPS for the rights issue. We'll have a look at that looking at this question. That will be easier for you. So you have 11 lakhs and 15 lakhs. We've already done this question earlier. Number of shares outstanding prior to rights issue is 5 lakhs. एक share rights issue का price है 15 rupees and last date to exercise is March. Rights issue क्या है? 1 share for every 5 shares outstanding, which comes to how much? 1 lakh shares. Fair value of 1 share before the rights issue कितना है? 21. Okay. करना क्या है? Calculate basic EPS. Right, fine. So since we have already done this question earlier, quickly on the chat box, can you compute for me the first step, that is X rights value per share? Can you all calculate the theoretical X rights value per share? How much do you get? Theoretical X rights value per share is what we want. $20. How do you get that? Mn plus SR, N plus R. So can you tell me what is the value of M in this question? What is the value of M in this question? 21. Okay. What is the value of N in the question? What is the value of N in the question? Okay. What is the value of S in the question? What is the value of S in the question? And finally, what is the value of R in the question? 1 lakh. Okay, excellent. So you all have got the values right. It is of course 20. Okay, come to step 2, calculation of adjustment factor. Tell me, how will you do that? You have calculation of adjustment factor, which is fair value per share before the rights issue. Can you tell me what is the fair value per share before the rights issue in the question? 21. Okay, perfect. What about theoretical X rights value? What is your theoretical X rights value in the question? 20. Okay, from where did you get 20? From where did you get 20? Step 1. Okay, your final answer will be, how many times is the adjustment factor over here? 1.05 times. Okay, Now let me explain the third part to you. What happens in the third part? We will think in this way. For the current year, that is 2012, let's calculate. In fact, let's calculate for 2011 first. Pay attention, please. 2011, let's solve that first. In 2011, you have a profit of how much? 11 lakhs. So you have a profit of 11 lakhs. So you have 11 lakhs divided by 5 lakhs multiply by 1.05 into 12 by 12. So 1.05 into 12 by 12. As what happened was, you were confused as to when, how many people will exercise the option of right shares and how many will not. In the previous year, the entire year, you did not know how many people will exercise the right shares. So you will take 5 lakhs into 1.05, which comes to 5 lakhs into 1.05 comes to how much? 5 lakh 25,000. So you have 11 lakhs divided by 5 lakh 25,000. You will get 2.095. So you can take it as 2.10. Are you getting it? 2.10 is what you will take. On the other hand, if I talk about 2012, that is the current year. Let's see how do we solve that. 2012 for the current year. Let's have a look at what's your profit. For the year 2012, your profit is 15 lakhs. So we take 15 lakhs. Okay, now please understand. The last date to exercise the shares is 1st March. The last date to exercise the right shares is 1st March, which means till 1st March, we will be confused as to how many people will exercise the option and how many people will allow it to lapse. For the remaining months, we know after March, we will exactly come to know how many people exercise the right. So we think in this way, 5 lakhs into 1.05. Now this confusion was clarified in March. So January and February, 2 months we were in confusion. So 2 by 12 plus 5 lakhs into 1.05. In fact, we'll take it 6 lakhs because the number of shares that will increase is by 1 lakh. तो 5 lakhs already थे, 1 लाख से हमारे number of shares बढ़ेंगे. ये 6 lakhs हमारे business में कब तक रहेंगे? 10 divided by 12. Now do not take the adjustment factor. Remember, you will take the adjustment factor only when there is confusion. When there is no confusion, you are absolutely clear as to what is the position, then you do not take the adjustment factor. I am again explaining to you, please understand carefully. What I am trying to explain to you is that over here, you have taken 5 lakhs, which will change in the future. To what extent you do not know. That is why you use the adjustment factor. This confusion remains only for 2 months, January and February. So we will take that over here. On the other hand, when you have 1 lakh more shares, the value comes to 6 lakh shares, which remains in the business for 10 months. अब देखो 5 लाख बढ़ के 6 लाख हो गया, तो 1.05 एडजस्टमेंट फैक्टर आपको यहाँ पे लेने की जरूरत नहीं है. Right, let's calculate that. You will have 15 lakhs divided by, you have 5 lakhs into 1.05 into 2 divided by 12. You get 87,500. So at one place, I take 87,500 plus 6 lakhs into 10 divided by 12. You get 5 lakhs. So finally, you have 15 lakhs divided by 5 lakh, 87,500. Let's take that 15 lakhs divided by 5 lakh, 87,500. You get 2.55. So you will have 2.55. Right, so that is how you will calculate. Here you have 2.55 and you have 2.1 as well. Right, I hope you're clear with this aspect. quickly on the chat box. Are you all clear with this? Are you all clear with this? Quickly on the chat box. Okay, I have one doubt which says, please explain again the reason of step number 2. Okay. So, Ishika, please understand the entire concept. Step number 2 tells you what is the adjustment factor. Now, how will you calculate the adjustment factor? Means राइट से पहले आपके शेयर की वैल्यू है 21, राइट्स क्योंकि आपके पास राइट्स आ रहे हैं, नंबर ऑफ शेयर्स कंपनी में बढ़ रहे हैं, आपकी वैल्यू बिकम्स 20. से हमारी वैल्यू 21 से हमारी वैल्यू घट के 20 हो जा रही है. सो द क्वेश्चन इज बाय हाउ मेनी टाइम्स विल माय नंबर ऑफ शेयर्स बी इंपैक्टेड, बाय हाउ मेनी टाइम्स विल माय टोटल ईपीएस बी इंपैक्टेड. So in order to calculate the number of times, we use a tool known as the adjustment factor to understand by how many times will this impact us. Right? I hope, Ishika, that is now clear to you. Okay. I have one more doubt which says, can you please repeat why do we calculate X rights fair value per share? So that you can compare X rights with the value including rights and then decide कि X rights कितना value और rights के साथ कितना value आएगा. That is why it is called as theoretical X rights fair value per share. So that you can compare कि rights से पहले इतना value था, rights के बाद इतना value. Right, I hope, Shifa, that clarifies your doubt as well. Okay. I have one more doubt which says that suppose if existing shareholders do not subscribe to the sufficient number of shares, then the company would be required to issue shares to the public. First thing, that is wrong. ऐसा कुछ नहीं है कि right shares में नहीं बिका तो तुरंत public को issue करना पड़ेगा. Sometimes the company may not issue any shares in that case, right? So the company will, ऐसा जरूरी नहीं है कि अगर आपने नहीं किया तो आपको सीधा पब्लिक को देना पड़ेगा. It's not so. You can cancel the shares and keep them with yourself. On the other hand, the procedure for IPO or FPO, that is further public offer, is different, and the procedure for right shares is different. So does not mean कि right shares नहीं हुआ तो आप सीधा वो कर लोगे. उसका procedure अलग है, and that is a completely different thing to be taken care of. Right, if this is done, let's go to the last part of this accounting standard, that is your diluted EPS. Now let's understand this entire concept. Diluted EPS is to be calculated if the institution has potential equity instrument. Very interesting point. This is potential equity instrument. Potential equity instrument means an instrument, a debt instrument which is not equity today, but it will become equity in the future. Which means आज तो हमारे number of shares affect नहीं हो रहे हैं, पर क्योंकि मेरे पास convertible debentures है, convertible preference shares है, convertible bonds है, ये number of shares आगे जाके ये मेरे number of equity shares आगे जाके बढ़ाने वाले हैं. That is known as a potential equity instrument. आज equity नहीं है लेकिन आगे जाके ये equity में convert हो जाएगा. Now, whenever you have a potential equity instrument, it is sure कि क्योंकि आगे जाके number of equity shares are going to increase, your EPS will reduce. This reduction is known as diluted EPS. आपका EPS घटने वाला है आगे बढ़ के, क्योंकि वो आगे जाके घटने वाला है. आपकी ड्यूटी है कि आप इन्वेस्टर को आज से ही बता दो कि देखो भैया हमारे पास कन्वर्टेबल प्रेफरेंस शेयर्स है, ये आज तो इक्विटी नहीं है लेकिन आगे जाके इक्विटी होने वाला है. क्योंकि ये आगे जाके इक्विटी होने वाला है, हमारे नंबर ऑफ शेयर्स बढ़ेंगे और ईपीएस घटेगा. हम आपको आज से ही बता देते हैं कि आगे जाके हमारा ईपीएस कितना घटने वाला है। हमारा काम है आपको सारी इंफॉर्मेशन देना। उसके बाद अगर आपको फिर भी सही लगता है कि नहीं हमें इन्वेस्ट करना है, सो यू आर फ्री टू इन्वेस्ट इन अवर कंपनी। However, as of now, we are informing you that we have a potential equity instrument which will convert itself into equity shares in the future. Right? That is the meaning of a potential equity instrument. So it says diluted EPS can be calculated if the institution has a potential equity instrument such as convertible preference shares, convertible debentures, convertible bonds, share warrants, stock options, etc. Diluted EPS means profit to equity shareholders divided by Vains. ये formula तो will remain as it is. The addition will be additional profit. So because you do not now have an equity instrument. Because you do not now have a debt instrument, that debt instrument का interest or cost will be saved. When you save interest or cost, your profit will increase. So that is additional profit due to cessation of potential equity instrument. Say for example, you have convertible debentures. आपको पता है आज डिबेंचर इंटरेस्ट, क्योंकि आज हमारे पास डिबेंचर्स है, वी चार्ज इट टू द पीएनएल बिकॉज इट इज अ चार्ज अगेंस्ट द प्रॉफिट। वो डिबेंचर का इंटरेस्ट आगे जाके जब ये शेयर्स डिबेंचर नहीं, जब ये इंस्ट्रूमेंट डिबेंचर नहीं रखे इक्विटी बनेगा, तो आपका डिबेंचर इंटरेस्ट सेव होगा, उतना खर्चा आपका बच जाएगा। क्योंकि आपका खर्चा बच जाएगा, this is as good as your increased profit. So your profit will increase. Why? Because there is cessation of potential equity instrument. On the other hand, with the increase in profit, your number of shares will also increase because those debentures will now convert themselves into equity shares. Are you getting it? So your diluted EPS formula is very simple. The formula for basic EPS remains the same. That is profit to equity shareholders divided by Vains plus additional profit due to cessation of potential equity instrument divided by additional number of equity shares due to cessation of potential equity instrument. Right? Look at the next point. It says diluted EPS should be reported only if it is lower than basic EPS. तो आपका basic EPS के कंपैरिजन में अगर हमारा diluted EPS कम आ रहा है तो ही रिपोर्ट करना है, अगर ज्यादा आ रहा है तो प्रूडेंस कंसेप्ट के हिसाब से you cannot show the anticipated gain. You will record it only if it is diluted, that means reduced EPS. If it increases, then it is known as anti-dilutive EPS, which you will always ignore and never report. Right? Look at what they have explained. Diluted EPS is to be reported only when it is lower than basic EPS, and if potential equity instrument is increasing the EPS, then such instrument is known as anti-dilutive, and it is to be ignored for determining the diluted EPS. Are you getting it? Okay. Then you have this key point. Let's understand this. This we have not done earlier, so please pay attention. It's a very simple point. It says list of shares issued and from when will you start calculating the time weight. तो वेन्स कैलकुलेट करने के लिए हम टाइम वेट लेते हैं। टाइम वेट की कैलकुलेशन कब से आपको शुरू करना है वो ये टेबल आपको बता रहा है। मान लीजिए केस 1, if you give shares and get cash against it, means you issue shares for cash or for payments, that time you will begin calculating the time weight from the date when cash becomes receivable. This is exactly that we have done. जिस डेट से हम इशू करते हैं और जिस डेट से हमको पेमेंट मिलता है उस डेट से हम टाइम वेट कैलकुलेट करते हैं। Right? I would like to draw your attention to one question that we did in the previous lecture, where 5 rupees were called today and remaining 5 were called in the month of September. So we did not take the entire 10 rupees at one go. We took it as and when cash became receivable to us. So that is how this will be calculated. Weight will be taken from the date when cash becomes receivable. Point 2. Equity shares issued as a result of conversion of a debt instrument. So you will take this from the date when it gets converted. From the date of conversion, you will start calculating the time weight. Third, equity shares that are issued in place of interest or principal on other financial instruments. So you will take the date when the interest ceases to accrue. Equity shares issued in exchange for settlement of liability of the enterprise. So you will take date on which the settlement becomes effective. That is the date when you will take it. Equity shares issued as consideration for acquisition of another asset other than cash. मतलब आपने शेयर्स दिए सामने असेट ले लिया, so date on which the acquisition is recognized. And finally equity shares issued for rendering of service, आपने shares issue की और सामने वाले की service ली, so the date when the services are rendered, right? So these are the dates from which you will start calculating the veins, the time wait for the veins, in fact, to be precise, right? Now, since we are done with this, let's quickly have a look at question number 7. In the following list of shares issued, for the purposes of calculating weighted average number of shares, from which date weight is to be considered? There are 6 cases. You will give me answers to all the 6 cases. Chalo, quickly on the chat box. Case 1. Equity shares issued in exchange of cash. From which date will you take the time weight? From which date will you take the time weight in this case? Date of cash receivable. Okay, date of cash receivable. Perfect. Let's look at the solution. The following date should be considered for considering of weights for the purpose of calculating weighted average number of equity shares in the given situation. Date of cash receivable. Date of cash receivable. Look at the second one. Equity shares issued as a result of conversion of debt instrument. Tell me, what is that we should take over here? You will take the date of conversion. Okay, come to look at the answer to the second one, date of conversion. Perfect. Come to the third one. Equity shares issued as an exchange for settlement of the liability of the enterprise. Date when the settlement becomes effective. Okay, perfect. It says date when the settlement becomes effective. Come to the fourth one, which says equity shares issued for rendering of service to the enterprise. Date on which the services are rendered. Okay, come to the fifth one. Equity shares issued in lieu of interest or principal or any other financial instrument. What will you take? Date on which the interest ceases to accrue. And finally, the last one, equity shares issued as consideration for acquisition of another asset other than cash. What about the last one? Okay, it is date of acquisition. Okay, perfect. Let's have a look at one question that will explain to you the entire concept of diluted EPS. But we can have a look at this question, which is question 10. In fact, let's not look at question 10. We first look at a basic question. Okay, question 17. Let's quickly have a look at question number 17. This is again a question that we have already done. I'm just revising so that you can also revise for yourself. Let's quickly have a look at question 17. It says your net profit for the current year is 1 crore. Your number of equity shares outstanding is 50 lakhs. Chalo, quickly on the chat box. What's your EPS? Quickly on the chat box. What's your EPS? Your profit is 1 crore. Number of shares outstanding is? Okay, it is 2. Now let's understand. Your basic EPS is 2. Let's go to the diluted EPS. Now first you all tell me, this number of shares, is this number of debentures or the value of debentures? Quickly on the chat box. Number, okay. Can you tell me how much interest ultimately we will be saving in this case? How much interest we will save? So you will think in this way, 1 lakh into 100 into 100, and this into 12% comes to how much? 12 lakhs. So 12 lakhs we will save. How much is my existing profit? It is 1 crores. So my existing profit is 1 crores. ध्यान देना, 12 lakhs is what I will save. लेकिन 12 lakhs पे मुझे 30% tax benefit पहले मिल रहा था, वो अब मुझे नहीं मिलने वाला है. So I will reduce from that 30%. So 12 lakhs into 30% is 3,60,000. So 1 lakh. So 12 lakhs minus 3,60,000 comes to 8,40,000. So I will add over here 8,40,000. You get 1 crore 8,40,000. 1 crore 8,40,000. Let's understand the number of shares that will increase. The number of shares, 1 lakh is what we have right now. Debentures, each debenture will be converted into 10 equity shares. So 1 lakh into 10. 1 lakh into 10. How much do we get? 10 lakhs. So over here you have 10 lakhs and already you have 50 lakhs. So you have 60 lakhs. Let's look at the diluted EPS. You get 1.80. How much EPS did you calculate? 2. So your basic EPS is 2 and your diluted EPS is 1.81. Now tell me, 2 and 1.81, Is your EPS after this conversion reducing, yes or no? Is your EPS reducing, yes or no? Of course it is reducing. Is this diluted EPS to be reported, yes or no? Is this diluted EPS to be reported, yes or no? Of course it is to be reported. Right, are you getting it? Okay, this is all that we have done till now in this accounting standard. If you look at the questions that are left, question number 7 we have already done. The second part, there is one more part to diluted EPS that we will do in question number 18, and finally we will do question number 20. So this brings me to the end of the entire revision of accounting standard 20, whatever we did till now. Are you all clear with this? Quickly on the chat box. Are you all clear with this? Quickly on the chat box. If you're clear with this, let's quickly take a 10 minutes break and then we continue. We do the remaining 2 questions and then we take your doubts. Okay, perfect. Since you all are clear with this, it is 9 o'clock right now. Let's take a 10 minutes break. I will see you at 9:10 sharp. We continue doing question number 18 and question number 20. Then once again, quickly looking at the summary of key points, we will revise the entire accounting standard, and then if you have any doubts, we will take them. So today we should be in a position to finish off AS-20. From tomorrow, we will begin with a new accounting standard. Right? Take a 10 minutes break. I'll see you after that. Okay. Let's go to our last two questions that are left in this accounting standard. Come to question 18. Come to question number 18. Mark that important last day revision question, question number 18. On page number 166. Question 18, पेज नंबर 166. ध्यान देना, बहुत इंटरेस्टिंग क्वेश्चन है और ऐसा क्वेश्चन हमने किया है पहले भी. It says net profit for the year 2012 is 12 lakhs. Weighted average number of equity shares outstanding is 5 lakhs. Average fair value of one equity share during the year 2012 is 20. So average value per share is given. Weighted number of shares under option is 1 lakh. Exercise price of shares under option is 15. करना क्या है? Calculate basic and diluted EPS. चलो, let's solve this question. Put your first statement. As per AS-20, earnings per share. Calculation of basic and diluted EPS. Particulars amount in rupees. Solve this question along with me. It's a question we have already done, so you all can solve along with me. Prepare this format. Prepare this format properly. Chalo, let's begin with the basic. Net profit for 2012 is 12 lakhs. Net profit for 2012 is 12 lakhs. Take your wins, 5 lakhs. So you get basic EPS to be 2.4. 2.4. Your number of shares under option. How many number of shares are there under option? Look at the question and tell me. कितने shares है हमारे पास? How many shares are there under option? 1 lakh. 1 lakh. What is your exercise price? What is your exercise price in the question? 15. Okay, let's go to the next one. अगर सारे लोग ये ऑप्शन एक्सरसाइज करेंगे तो कंपनी के पास टोटल कैश कितना कलेक्ट होगा? 15 lakhs. कंपनी के पास टोटल कैश कितना कलेक्ट होगा? 15 lakhs. And what is the fair value of one share? Fair value of one share is how much? Look at the question. $20. Fair value is 20. अब ध्यान देना, सबसे इंपॉर्टेंट पार्ट अब है, इसलिए प्लीज पे फुल अटेंशन. हमने 15 लाख कलेक्ट किया 15 रुपए के हिसाब से. अगर हम ये ऑप्शन की बात नहीं करके चुपचाप यही 15 लाख मार्केट से कलेक्ट करते तो कितने शेयर्स हमें मिलते? ध्यान देना, नंबर ऑफ शेयर्स that could have been issued if given at market fair value is 15 lakhs divided by 20. Comes to how much? 75,000. Number of shares issued without consideration. ध्यान देना, आपने 1 लाख शेयर इशू करके 15 लाख कलेक्ट किए. वही सेम काम 75,000 शेयर्स इशू करके किया जा सकता था, पर क्योंकि आपने वैल्यू रिड्यूस किया, आपके नंबर ऑफ शेयर्स बढ़ गए. जो काम 75,000 शेयर्स कर सकते थे, आपके लिए कितने शेयर्स ने किया? 1 लाख ने. सो हाउ मेनी शेयर्स डिड यू इशू फ्री ऑफ कॉस्ट? 25,000. 25,000. Are you getting it? Are you clear with this? Take this down properly. Okay. Now, am I audible to you all? Am I audible to you all? Okay. Let me finish off this question first. Then I guess I have two doubts. I will take those doubts then. So you have over here shares issued without consideration. Let's finish off this question first. So now let's calculate diluted EPS. Your net profit is how much in the question? 12 lakhs. So that will remain 12 lakhs. Now quickly on the chat box. How do you calculate veins for bonus issue? On your chat box quickly. How do you calculate veins for bonus issue? How do we calculate veins for bonus issue? You will take the earliest reporting period. Okay, perfect. So let's calculate veins. For veins, you will have 5 lakhs तो already है हमारे पास. We will add to that 25,000. So my total comes to 5,25,000. What is your diluted EPS? 12 lakhs divided by 5,25,000. You get 2.29. You get 2,29,000. Tell me, is your EPS diluting? Yes or no? Is your EPS diluting in the question? Yes or no? Is your EPS diluting in the question? Yes or no? Your EPS is diluting. So will we report on the chat box? Will we report 2.29? Yes or no? Will we report this diluted EPS? Of course, you will report this diluted EPS. Okay. Now let's take those two doubts that I had earlier. One of them says we are also required to find out diluted EPS. Yes, Spruha, we have done that. And shouldn't we add 75,000 as we are adding the number of shares increased in case of diluted? No. So Ishika, the question is 15 lakh rupees आपके लिए 75,000 shares लेके आए हैं. पर लेके आ सकते थे, पर उसके लिए आपने कितने शेयर्स दिए? 1 लाख. So 25,000 is something that you are giving extra. So that extra is known as your bonus element. So that is how you will think in this case. You cannot think in this case that it is 1 lakh and 75,000. So 75,000 will be added. That is really not correct. That is not the way it will work. Right. So I hope Sprua and Ishika, your doubts are solved. You have to simply think in this way कि यही पैसे जो 15 लाख हमें 1 लाख शेयर देके मिल रहे हैं, वो हमें मार्केट में कितने में हम दे सकते थे? 75 में. जो काम 75,000 शेयर्स कर सकते थे, वो हमारे लिए कितने शेयर्स ने किए? 1 लाख शेयर्स ने. सो 25,000 एक्स्ट्रा इज माय बोनस एलिमेंट. Are you getting it? Ishika, I hope that is now clear to you. Okay, perfect. Fine. So I had one more doubt earlier when I began this question, and I think it was of Raj, which says, how will we deal with a scenario where there is both bonus and rights issue? So you will never have in one question both bonus and rights issue. You will either have first bonus and then you will have rights issue, or first you will have rights issue and then you will have bonus issue. So both together will not be there. However, there is one question, Raj, in which you will have two scenarios. One will be bonus and the other one will be diluted EPS. So you will have potential equity instrument as well as bonus both in one question. That is the kind of question where which you can have. So that is something that we will see right now. Sprua, we will not consider 75,000 shares because 75,000 shares is what you could have done. What have you actually done? 1 lakh. What you could have done? 75. Did you do extra? Yes, 25,000. Then 25,000 will be added over. Okay. Right, Raj, I hope that is also clear to you. Okay. So Anjali, for Wayne's calculation, it is absolutely simple. आपके पास 5 लाख शेयर्स है, उसमें 25,000 ऐड हो जाएंगे क्योंकि वो विदाउट कंसिडरेशन है, तो आपका वेन्स हो गया 5,25,000. So because you take the earliest reporting period, it will be 25,000 into 12 by 12, which will remain 25,000. तो आपका total वेन्स हो जाएगा 5,25,000. Right? I hope that is clear to you. It is basically a stock option that the company may give to its. No, it is not right issue. It is stock option. So companies also have an option known as the stock option that they give. I am sure you would have heard about ESOP, employee stock option plan. Right? I hope, Raj, you would have heard about ESOP. It is ESOP kind of an option that they are talking about. Right? I hope it is now clear to you. Okay, let's go to question number 20. Mark that very important question. Question number 20. Okay, what we do is, do you have any other lecture today after my lecture? Which lecture do you have today after my lecture? Okay, and what is the time of that lecture? 10:30. Okay, so now this question will take at least 15 minutes. So what I recommend is, I think this much is sufficient for today. What we have done is we have revised the entire standard from step 1. We have finished off the entire standard. Only one question, question 20 is left. All your doubts have also been taken. So what I recommend is you quickly today go back and revise the entire accounting standard 20, whatever we have done. Just leave question number 20 for me. I will do that probably whenever I have my next lecture. I think I have it tomorrow. So we will finish off AS-20 tomorrow, and then we go to accounting standard 10 that you have. Right? So I think this much is sufficient. It will take some time for me to do question number 20. So let's not take that chance. You hardly have 8 to 10 minutes left. So we will do that tomorrow. go back today and revise entire accounting standard 20. I have revised each and every concept once again. We have also looked at the questions that we have already done in the past. So revise everything properly, and then tomorrow we will continue with the standard. I will finish off the standard and then we move to accounting standard 10. If you have any doubts, please get back to me. I'll solve them. Thank you so much for attending. I will now see you tomorrow. Thank you.